Yeah, no, it opens my mind. That's the thing. I think that's what I love about business, this type of business. Like the sky's the limit, right? Like it's hard to build a business to sell, but if you can do it, it's it must be an amazing. Like your client the other day that's getting $2 million or whatever. That's a great feeling. You built something and you get that payday. I mean, then there's the clients that get 50 million, 20 million. I mean, it's just amazing, right?
It's incredibly validating. That's what I find about this. Like you put your blood, sweat, and tears in something, and then somebody else validates your business with a whopper of a wire. It's incredible. And it's so few entrepreneurs get the chance to experience that. And they're not that far away. They're not that far away from it.
Yeah, amazing. Hello and welcome back to the Investor Financing Podcast. Today's a first for the show because we're going to talk to a very experienced business broker in the online website space like e-com, SaaS, tech, and internet companies. Our guest today, Nate, represents both buyers and sellers of e-commerce brands, Amazon brands, website properties, manufacturers, app developers, SaaS companies, subscription-based, SEO, pay-per-click, media, marketing agencies. So anything online is what Nate specializes in. And Nate not only has been established in this space, but he also has started and founded and exited quite a few businesses, online businesses. And it looks like Beard Czar, a company you started, and I think you sold that by now, is doing 35 million in sales. Well, that's pretty awesome. So you not only understand the brokerage side of this, you've been on the buy and sell side, and so you're like a well-rounded business broker. So in the online niche or space, I guess you call it. So this is pretty cool because it seems like as we see everything is online. And as I do financing, what was interesting is like e-com stores and stuff were hard to finance like a few years back. Now it's becoming so common. As long as the business is domiciled in the U.S. and they got 3 years of good financials, it's showtime. So welcome to the show, Nate. Thanks for joining us.
Thanks for having me. Pleasure to commingle my real estate career and e-commerce career and business brokerage. Like we're all swimming in the same space.
Yeah, I mean, a lot of my real estate investor clients that I've been financing on buying multifamily properties, they're entrepreneurs, and I see a big shift right now over the last 12 to 24 months of people going, you know what? There's all these businesses for sale. There's so many people that want to get out of these businesses. It's a good time to buy, and then on the flip side, it's an amazing time to sell. So today I want to dive into what makes a good business. If you have an online business, how do you exit out of it for maximum exit? And you wrote the book on that, and we'll tell people where they can get a copy of that. And then also the flip side of it is for somebody who's an entrepreneur that says, where can I get a good value play on an acquisition? And how do you go about finding those good opportunities? So where would you like to start?
Yeah, let's start on the sell side because it's going to relate, I think, to what a buyer is going to be looking for as well. A seller has a good business, meaning one that has buyer interest when it's at least 2 years old, when it's making at least $250,000 a year in trailing 12 months profit. And it can be transferred. It can be successfully transferred to a buyer. And then on the buy side, most of my buyers are looking for a high reward on low risk. So for them, the older the business it is, and the more profit it's making over a reliable track record of time, and something that can be transitioned into or acquired and continue to make this cash flow that it has historically made, is a lower risk transaction than these speculative deals, which are really young ones and real spiky in revenue and that sort of stuff. My background was in real estate before I got into e-commerce. I was talking to a buyer yesterday that they invest in real estate and they invest in e-commerce. They go really well together. The numbers make sense. The key performance indicators of what buyers are looking for is a little bit different. You're not necessarily looking at like loan to value and trying to buy, a property or a piece of land or something that's 50 cents on the dollar, versus of value versus appraised value or market value. But you are in the e-commerce space. The key metric is its trailing 12 months seller discretionary earnings, or EBITDA, or cash flow. Those are all kind of synonymous for how much money is this puppy making in the last 12 months. That's where
and what's kind of like a rule of, I know there's no rule of thumbs, but like if my discretionary income is X, I could probably sell it at a multiplier of X, right? Is there just kind of like can you give us like the framework of how you would determine a business value?
Definitely. So what we see in the marketplace, so let me just clarify where my universe starts and ends. I'm a lower middle marketplace, and that's typically businesses between $1 million in asking price for sale price and $150 million in sell price. We call it enterprise value. In that range, the multiples that we see across the marketplace, our comps, our comparables, we're selling those types of businesses depends on their growth. If they are growing 25%, 50%, 100% year over year, we're seeing multiples in the 3.75 range to 5.5 times multiple. So let's just say it's $1 million is the trailing 12 months. So the last 12 months of profit. You can see somewhere between $3.75 million to $5.5 million per $1 million of earnings. That's if it's growing.
If that's not gross revenue, so that's the actual net income.
Correct. That's the net income. That's the profit it's making.
Okay.
That's that. We don't do any valuations based on gross sales. That's a myth. And that's something that I, as a broker, I have to break that myth to my client who, let's say he's doing $20 million in gross revenue and he's only making $1 million and he thinks he's worth $20 million. He is not worth no $20 million. I can't find a buyer to pay on gross revenue. All of my buyers are evaluating these transactions on the trailing 12 months net profit.
Very interesting. What trends do you see in this space right now? I mean, like if let's just put yourself in the shoe of a buyer, like what are the emerging concepts, I guess you would say? Where are people kind of, where's the hot spot, I guess, for a buyer?
Yeah, so a great spot for buyers is in the kind of the SBA range. So if you can get financing in the the $1 million to $5 million range, that's a great spot. One thing I want to finish clarifying about that last question is like, what's the framework of multiples? It's that 3.75 to like 5.5 if the business is growing. If the business is just stable, that multiple does come down. It could be somewhere in the 2.75 to maybe 3.75 range of trailing 12 months net income. If the business is going down, I won't even list it. Our marketplace only lists stable or growing cash flowing companies. If it's declining, the multiples there are sometimes no multiple. It may just sell for the inventory, and sometimes only partial inventory. And selfishly speaking, as a business broker, I can't make any commission on that, so I'm not going to bother listing it. Those deals need to be self-listed on BizBuySell or some platform that handles the self-listing. Okay, I forgot the most recent question. I wanted to clarify that, but repeat your last question.
No. So I was just talking like where are you seeing a big buyers?
Oh, yes.
What space within the e-com, SaaS, tech, internet? What's really the
space I love is that SBA finance space. So between $1 million and $5 million, the asking price or enterprise value of those businesses that qualify for an SBA loan or SBA guaranteed loan on the buy side. I'm routinely assisting my sell side clients get their finances in order, get their taxes filed, show proof of profitability on their tax return. So financiers like yourself, brokers like yourself, can get us on the buy side $1 million to a $5 million loan, and it has definitely increased. The interest rates went from like 8% to like 10.5% in the last 6 months. But usually I'm finding sellers are still able to get a sell value that they will go ahead and say, yeah, let's do this. And buyers can use that SBA loan to acquire it and pay out, pay over 10 years on a note to acquire the business, let it self-finance it, let it do its own self-financing.
Yeah, I mean, if it's a strong buyer, meaning they have additional collateral, because all these deals typically have a collateral shortfall, so SBA is going to look for additional collateral. But if you have like a primary residence and you got a lot of equity in it, you can get 90% financing and potentially, and also if the seller is willing to leave 5% on standby, you can come in with very little cash if possible, right? So from a buyer standpoint, it makes sense because it's like you're going to have a predictable revenue stream. And then I guess from a buyer standpoint, like if I was working with you as a buyer, I'd be looking for something that was more of a semi-passive type of structure. And I think that would be like kind of like my criteria. Like what could I walk into where I'm not like taking on a 50-hour job, but I'm taking on more of a strategic play. And that's the cool thing about online businesses is most of them aren't like, there's usually establishment, but like, what are the types of opportunities? I mean, there's probably a difference between like almost a completely passive or semi-passive versus like your boots on the ground. You're actually working in the warehouse type of thing.
Yeah, we almost never sell one that's like working in the warehouse sort of things. Typically, the great thing about these online businesses is they are very scalable. So unlike real estate, which can sometimes be very geographically centralized around one geographic area, you've got the entire U.S. of customers if it's a direct to consumer company that's buying your products. You maybe have North America like Canada and some other, maybe you're doing some shipping to other English speaking countries. So you give yourself a lot of diversification, which I liked because I was very concentrated in real estate in 2005, 6, 7, and 8. And that came back to bite me in the ass. And it was part of the main appeal why I wanted something e-commerce and broadly distributed. The average type of deal here is in that $1 million to $5 million range is still an owner-operated business. So it might be an individual or partners or husband and wife team, but they have outsourced some of the main operational components of the business. So they'll have the fulfillment, the warehousing, the shipping, all that stuff is typically outsourced. So they're not picking and packing and putting stuff in boxes and driving it down to the post office. No, they're not doing any of that stuff. They're paying a dollar 10 cents to have some warehouse do all that for them per unit that's going out. They usually will have a customer service company handling, returns and dealing with customer, calls and escalating complaints and that kind of stuff. And then what they're doing is they're focusing on the cash flow of the business. They're typically doing ordering inventory and working with manufacturers of the physical products, placing POs and orders, making sure that strategically it's getting from China or Mexico or Thailand or Vietnam, wherever it's coming from, to the fulfillment center, the warehouse, and just paying bills at that point. That's the beauty of it. Most of them are working. Could be anywhere between 6 and 20, maybe 25 hours a week. Almost none of them are working 40, 50, 60, 70, 80 hours a week. That's not typical.
Nate, so can you walk us through the dance of the buy-sell transaction, what it looks like? So people understand if somebody was getting their business ready for sale, they've been in business 8 years, they've got good, they actually have good books, they have a good accounting system. They're getting ready to list it, and then talk from the perspective of matching the buyer with the seller.
Yep.
And then the due diligence process, typically for the buyer, what they would encounter.
Yeah, I'm going to limit it to the buy side since I get a sense that that's probably more attuned to your audience. Is that fair?
Yeah, I mean, it's probably both ways, but yeah.
Well, let's start with the buy side.
I like the buy side because I'm interested in buying.
Yeah. So typically the buy side, what I'm seeing is individuals that, they might be accredited investors, or they've got, a chunk of cash, because you're going to have to put some skin down. Like the whole, no money down Carlton Sheets thing, that doesn't really apply in this instance. There's going to need to be some skin in the game if you're looking for a growing, cash flowing, profitable company. That's where our marketplace excels. We're only listing those businesses, so we won't work with any like no money down buyers. It just like that just doesn't work for our clients. Even if they're getting financing with the SBA, they're still putting down something. They've got some skin in the game. So the way that this works is you would go to, if you're on the buy side, you'd be spread all over the internet. You're looking at all sorts of brokerages and marketplaces. You'd go to websiteclosers.com/businesses for sale, and you'd look at, we've got 100 businesses listed right now for in total about $520 million. So it ranges between 1 million and 20 or $30 million. Okay, I think we've got one that's 80 million. Sometimes we'll get $100 million business from time to time, but our average deal is like $2, $3, $4 million. You click on the inquire here button, and you get the listing broker would send you an NDA, or you get an NDA from our main office. It's kind of automated. You have to sign a non-disclosure agreement, or you won't even get to know the name of the company. We just have that confidentiality requirement with all of our clients. You have to do it for every deal. There's no blanket NDAs. You get to look at everything. I would recommend you pick out no more than 2 or 3, or it'll look really fishy on the sell side brokerage side. It'll look like you're just fishing for anything and everything. So if you do a little bit of due diligence and look, we'll share the type of business it is. We'll share a lot of statistics around it. It's cash flow for the last 12 months. You can see the listing price, so you can understand the multiple. You'll know how many employees are involved in it, how old it is. You can see a lot of that. And it drives me bonkers, buyers that don't look at any of that. They just hit the button all the time, and then they tell me they're not interested because it's too young. Well, I listed that in the blind listing. Why did you even click on the button? This tells me people, aren't they're not doing their due diligence on the front end, or they're not even looking at what's available to them. And I know they're not a serious buyer. They may never buy something. But once that NDA is signed, that queues up the broker to approval to send out the confidential informational memorandum. It's called a SIM. We call it an offer memo. People call it a prospectus. It's the same thing. It's probably about 15, 20 pages long. It has a bunch of information about the business, and usually will include a full set of financials for the last several years. Typically, income statements by month for the last several years, also balance sheets. Sometimes there'll be cash flow statements. There may be some inventory reports and some other details and stuff available then as well. It's the buyer's job at that point to thoroughly review it, see if it's a fit, and then reach out to the broker and say so. And I encourage my buyers to tell me a little bit about how they're capitalized. Are they already pre-approved for an SBA? I would recommend they do that before they start looking at businesses. So they could reach out to you to handle that part of it, get some kind of a pre-approval letter or something that states their credit worthiness. I would send that to the broker. I would also share what's strategically interesting about the business. And then if they're, what your experience has been acquiring businesses. If you've never acquired one before, just state so. So I'm looking to acquire my first business. I've got this and this and this advisor at hand. I've been pre-approved for financing from here, here, and here. And we work with first-time buyers all the time, and I have no problem with that. I generally recommend people be transparent. Don't do the whole fake it till you make it thing and try to fake somebody out. If you're new to this, just say you're new, you're looking for a deal, and the broker it's their job. We don't get paid until the deal gets sold and it's transferred. So we want to work with you, even though we are a sell side advisory firm. It takes 2 to tango. Once that
are a lot of these. It seems like this is kind of a fragmented space, like even more fragmented, a lot more fragmented than real estate, right? We don't have an MLS per se. There's all these fragmented wannabe MLSs, right? So,
yeah, that would be us. We're the biggest marketplace. We've got 100 deals listed for sale, and there's nothing quite like that. But every brokerage has their own. One brokerage may have 20 companies for sale. Another brokerage may have 10 or 15. We've got 100. So everyone's got their own email list. So you kind of have to go everywhere and keep an eye out.
Yeah. And so what are some mistakes that maybe a buyer gets it under contract and during the due diligence period, all of a sudden, oh, well, I'm not interested because they didn't know something. I mean, to me, logically, if I'm buying something in the 1 to 5 million, I'm most likely getting SBA financing. The great thing is that once I get the financials, it's going to my underwriter, right? And they're going to say, yeah, based on the actual tax returns, the income qualifies for the new loan. The debt service coverage ratio is good. We're good, right? That would be a obvious. That's the obvious thing to me. But I guess my point is what have you seen buyers maybe during the due diligence period get scared about, that they just should maybe get a better understanding about the process?
Yeah, so I think a first-time buyer would do themselves a huge service by having a due diligence partner, help them with it. If it's an SBA deal, the SBA and the lender, like all of the finance side behind it, no one's going to guarantee and fund that deal until they do the due diligence as well. So that gives you a little extra, I think, on the buy side, that would give me extra sense of relief that there's a bunch of eyes looking at this. A formal appraisal is done. There's a bunch of steps that happens on the finance side that loan will not close until all of that due diligence is done. And in some cases it's really quite easy because, as you said, there's tax returns. The seller has attested under penalty of perjury that this is accurate. So if they're trying to like sneak something through, they're not only subject to potential lawsuit from you, they've also got issues with with Uncle Sam. So I think that sometimes I'll see some buyers will still not believe it. Like they'll look at this stuff and they're coming from a cynical perspective that this is just too good to be true, and you've wasted everyone's time if that's the case. I would really sit with what is it that you want and what are you looking for, and focus on that, and then trust in the advisors that you've got available to you. And if you don't feel like you've got the capability to do that yourself, you need to go ahead and pay for a consultant to help you. And there's a bunch of due diligence consultants that will review materials. What you need to do as a buy side, if you've got the SBA and the lending side doing the financial review and due diligence, you need to review the operational aspects of the business. You need to review, what are the ins and the outs of the owner operator, what's he doing, and can you do the same or better than they did? And you'll have their help too. And it's your right to ask for a long transition period. Ask for 6, 8, 9, 12 months of transition support. You can offer a consulting agreement to the current owner. What better way to stay in tune with the business than to continue working with the buyer or the seller long term? And I've coached all of my sellers, all of my clients to anticipate a consulting period, and it's in their best interest to make sure that there is long-term support for the buyer. And often there's compensation that's deferred from the transaction, so there's some teeth there that assists the overall transaction value where the seller is going to be involved.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So let's kind of take a step back and over your career, you've done, it looks like, a bunch of 23 supplement and e-commerce brands. And they were each grossing over $1 million since 2011. So you have a lot of experience. Do you still own any concepts or brands?
Not right now. No, I exited. I either shut down or sold off all of my brands in 2018. I was going through some life changes. I went through divorce and some health issues and that kind of stuff. So I took some time off and got my head straight, got my body straight, went and did some Ironmans, did a bunch of stuff to, kind of change my physicality and stuff as well. I lost a ton of weight and just kind of like put myself in a really healthy place. And then I happened to meet the founders of Website Closers, Jason and Ron, and I was mystified by the type of buyer activity that goes on in this space. And I ended up just joining them. I bought a franchise. I've got 2 of my own associate brokers, and now we do our wheeling and dealing underneath the broader scope of Website Closers, kind of set up like a Keller Williams. Like, imagine these different brokerages around, Virginia, Texas, etc. I'm in Puerto Rico and have a Puerto Rico franchise and work with these deals from there on. That's pretty cool. So you built a business around your lifestyle now. Absolutely. Yeah. I'm not working 40 hours a week. I haven't worked 40 hours a week in 3 years, and I'm not going to. I was just on a video with a virtual assistant. I love this space. I thrive in providing services, and then hearing the kudos after it's done. I part of that real like epiphany I had was in 2018 is I did the 5 love languages by Dr. Gary Chapman, and realized I was a words of affirmation and acts of service guy. So I get to provide what I feel is my blessing, my guidance, my wisdom to my clients. And then at the end of the day, I just had a closing yesterday for $2.3 million. I'm getting, my client is calling me, with the largest wire he's ever seen in his bank account, and just, sharing with me his praise and kudos, and just makes me feel incredible. I love those success stories. And I can do that over and over and over again. I could do this for 20, 30 years. Now I've found my calling now. It took me 42 years to find it, but I've got it, and here I am.
Well, that's pretty exciting. So, talk to me about one of your either like Beard Czar or any of the e-com or supplement companies. Talk to me about, like, I'm curious, just for somebody out there that's maybe running their business now and they're in the startup phase, or they're getting they're merging, they're getting some good revenue. Walk us through just the process that you went through, like one of your kind of, it doesn't have to be the home run deal you did, but
Yeah.
something that was like a solid, hey, I started this, and then, by year 5, our financials look good. We were getting ready to sell. And this is from the seller side perspective.
Yeah, absolutely. So there's probably the biggest obstacle I see, and what I was encountering with my own e-commerce brands, is you've got to get some kind of percentage of the market share. You've got to get your sales up. I see this, a lot with folks that are, kind of starting up and emerging. Once you get to, $1 million, $2 million, $3 million in sales, you're fighting, kicking, scratching for every penny you can get in those early days to try to get your sales up. That when you've got a hit, a home run, or even not, just something mediocre, and you can have a bunch of mediocre success and still do millions of dollars. That's so wild. If you find something that resonates in an audience, and they become advocates of it and start cranking, you can do some incredible things. We've got one client that she sells these like kind of holistic elixirs, and out of the blue, she did like $1.8 million in profit in the first year. And it's like, holy cow, it's incredible to see these success stories. But that's the big thing first, is you've got to get your sales and your profitability up, until you've got a track record for a couple of years behind you with this, profit. And it doesn't have to be like a mortgage, like servicing a mortgage or having a mortgage loan. It doesn't have to be like perfectly incrementally growing month over month. That doesn't happen in this space. You're going to have lumpy months. You'll have like great successes one month and not so much the next month. But consistently, if you can get your year-over-year sales up, that's when you start to have something that will whet the appetite of some buyers. So first thing, and I hear this in entrepreneurs organization events that I've gone to in the past, is until you get to like $1 million worth of sales, the only thing you should be focusing on is sales. Keep getting more and more sales. Online businesses are great because you don't have to do it yourself. You don't have to be a wizard of Facebook ads or Instagram ads. I have found a number of my successful clients have demonstrated some success at the marketing, but the majority of them are outsourcing that to an agency, or maybe they're advertising through podcasts to a specific demographic of people, or they're working with affiliates and having affiliates do the heavy lifting of the marketing on the front end of it. And they're just like kind of like Captain Kirk. They're just like managing the bridge, and they're like making the orders, making sure the orders are getting delivered, monitoring the marketing, and kind of sitting in that like sort of surveillance perspective, kind of like watching over everything.
So have you, out of curiosity, there's a lot of these kind of e-com store builders where they'll like run the business for you. Have you seen any of those actually trade a couple years later, like they actually did what they said? And
I've never seen one of those turn a client into a sale. Usually they tend to be more cash flow focused, less building of equity and building of an equitable sale. So I haven't had I know several people who they're what called like campaign managers, or they're kind of like they run the operations of the business. Like you maybe give them like 50 or 100 grand or something like that, and they'll put it to work as like on Amazon FBA store, selling as an Amazon third party seller, or they'll use affiliate networks and they'll be selling. It'll be a company selling private label supplements or something like that. which will turn the investor / owner kind of into like a passive investor. That's actually how I started. I ended up, doing a transaction with the campaign owner. I tried to buy a supplement company. It didn't pass due diligence. So I ended up partnering with a campaign manager, similar to what you're describing. I put in a couple $100,000, and after a period of time, I was getting my return back, more and more. And then the crap hit the fan. I had to jump in and start being like a little bit more operational than I had intended. We actually suffered from our own success. We went from like almost no sales to like $1 million a month in sales in May of 2012. And we weren't getting our shipments out fast enough. We ran out of inventory. We lost our credit card processing. We had the whole fiasco. But fast forward that into that year, we still done about $4.6 million in sales. And then we doubled year over year, every year for like 3 or 4 years till we got to about $20-30 million. And that's where we stabilized.
Yeah, I think it's so interesting because my background's all been real estate and financing and in owning real estate. And, now that I got it, a couple of years back when I got into SBA financing, it really opened my mind to like business entrepreneurship through owning businesses, whether it's like a service-based business or an e-com business. I mean, that's like, to me, it's like, is the place to be, really, because it's just different. I think like you should own real estate, definitely, right? That's your long-term wealth plan, but
Yep.
you need a machine that's going to spit out cash flow and that you can build and sell for a multiplier. Like you can do both together so perfectly. So I think that's why we're seeing a lot of entrepreneurs in real estate go, let's own some businesses.
Yeah.
Yeah. So
I absolutely agree. I see most of my successful sellers and buyers have some pedigree both in real estate and in e-commerce. It's a great 1-2 punch. You can make these big lumpy, chunks of change. You can fill your war chest on the e-commerce side much more so. And I used to flip single family homes. I was investing in pools of single family home mortgages, and we were doing lump sums of money there as well. But even unless you're in like a really incredible market and you're doing multi-million-dollar homes, which is its own specialty and nightmare, you're probably doing single family homes, that it takes you a bunch of those per year to make the kind of cash that you could get if you were to get one e-commerce brand up and running and sell it for $2, $3, $4, $5 million. And then you put that back into play with some passive investments back in real estate, or right now, the like bonds markets, like you're getting great, yields and stuff on bonds and stuff right now for, 6 months or 30 years.
Yeah. What's some interesting businesses that you've sold over the last year or two that
one I'm really excited right now, I've actually got listed for sale, is it's an online marketplace of land and lots. And the primary function of the business is acquiring land and lots at a discount and then reselling them at a profit. And they've done incredibly well. And in fact, that owner was an Amazon FBA e-commerce entrepreneur. We sold his business 2-3 years ago. And he pocketed, $3-4 million with it. Then, was of the mind frame, I want to build something else that I can grow and then sell. And he had a kind of a thirst for real estate, so he started acquiring land, and he's done an incredible job with it. I just launched it a couple of weeks ago, and I've had over 100 buyers sign an NDA for it. And I'm like working through, literally as soon as we get off the phone call here, I've got phone calls to continue vetting buyers to line up phone calls with him. It's one of the coolest businesses that I've seen because I love the real estate aspect of it, and then the e-commerce aspect because it's a bit of a marketplace of selling this land.
So it's a listing portal for, like, if I had a lot and I wanted to sell it there, I could sell it, and it matches buyer and seller kind of
No,
thing?
he's doing that. That's a growth opportunity that could also happen, but right now he's doing the acquiring of the land, and then he's going through the disposition process of the land as well.
And on his platform, he does either cash or seller finance terms.
It's mostly cash, which is another opportunity. He could be doing more seller financing, but that starts to become a cash flow consideration. But right now, he's partnering with investors for chunks of, putting down, $100,000, $250,000 to acquire tranches of land, and then reselling them.
So as a buyer, a potential buyer, that I'm looking at, like, the cash flow he's generated from the buy sell side. And then I'm going to get their formula, or his or her formula for acquisitions, how they're constantly being able to buy land at 50 cents or 60 cents on the dollar and sell it at 80 cents on the dollar.
the team, the sales team, the call center, like all of the activities that makes this basically a passive play. He works like 6 to 8 hours a week, and his partner's working like 10, 15 hours a week. So between the two of them, neither are working a full-time effort, and both of them for the right buyer that's really well funded, because the challenge with the growth of that is market expansion is money. Their model is very cash heavy, so they're paying cash for for the acquisition, and then most of the time they're selling them for cash as well. And so that particular type, I think, is ripe for opportunity, because you could do a lot of financing on both ends that they haven't explored yet.
Yeah, that's it. That's interesting. It's amazing. You know what I like about what you do and what you get to see is you get to see entrepreneurs really being creative, right? And like, I think that's the beauty about business. Like, if you're like, a lot of people get burnt out because they do the same stuff and they don't enjoy it. But I like what these entrepreneurs are doing. They're coming in, they're creating these amazing business, and then they're saying, hey, now we've created value. And they probably, like, one of my questions is like, well, why do they want to sell? And I think the answer is, hey, we've created a lot of value and we want to go work on a new fun project.
Yeah, the majority of the time they're bored, they're burnt out, or they have a passion for something else. And I certainly, that resonates with me. I have a really difficult time sitting still in one business entity, operating that one business entity for multiple years, which is one of the big reasons why I stopped doing it. I just found that it was energetically draining for me. It didn't enliven me. And I love being able to see, I as a business broker, I could do between 10 and 15 transactions a year just by myself. My other associates each can do about that much. So I'll see that much transaction volume myself. And with 40 brokers at Website Closers, that's where we're doing like 250, 300 deals a year. So everyone's managing, 8 to 10 or some on transactions. And I love seeing our whiteboard. Like, we've got, like I said, I think it's like 99 or 100, 103 deals last time I looked at it. And I'm super curious about how people are making money. And all of these are like, they're no BS companies. They are making money. We can't sell them and we can't make a commission unless there's verifiable cash flow in these transactions that is over a course of multiple years.
And Nate, does it work the same way? It's like as real estate, as far as there's a buy side, sell side for commission. So if there's a buyer, and then is that typically how it works?
They're more often than not, the sell side broker, at least the Website Closers, is also handling the buy side. We are the firm is a sell side advisory firm. So the caveat there is, every time we do a listing, the main office, we use one common buyer list. So we have like 167,000 buyers on our buyer list. And so the sell side broker, the one who's listing it, they get the benefit of having direct outreach and communication with any buyer that's on that list. Now, over time, we develop relationships with our buyers. And then we're also encouraged within the firm that if you've got a relationship with a quality buyer, to reach out to the listing broker with your buyer. And in that case, we split the commission amongst each other, and we will have a buy side broker and a sell side broker. We don't do that sort of situation typically with brokers outside of Website Closers unless they've already agreed to a commission structure with their client directly. We don't split our commission with them. It's a little probably like what real estate was, a longer time ago. There's not that formal agreement between brokerages to split commission, and it may be a while before that happens.
So like 95% of your deals are all in-house, essentially.
Yeah, absolutely. Pretty much all of our deals are sourced with our buyers already subscribed to the Website Closers marketplace.
Yeah, that makes sense, because it's just so fractured. That's why, like, I'm in this mastermind group and we have all these micro groups, right? And there's one for buying small businesses. And it's like all they're doing all day is looking for businesses. It's kind of funny. Just like, that's the hardest thing. It's like, but so like, proof's kind of in the pudding, because Website Closers has more listings than anybody, other than like the generic websites that are, kind of like the LoopNets of the world, where people really don't buy the decent deals on.
Yeah, if you're a really high value investor, you can get into some closed network marketplaces. Or you've got to go swim at BizBuySell. It's like BizBuySell.com is kind of like the LoopNet, for business. Yeah. But then you've got to filter through the tens of thousands of listings that are like grocery stores and like small retail mom and pop, a boutique thrift store. And we're only internet, digital technology. There's got to be an online component. We don't do any brick and mortar. We're not doing restaurants. We don't have any of that sort of stuff. That's just not our niche. We're not interested in it. We don't have any buyers interested in it. But over the years, we have also syndicated and listed our transactions, our clients' businesses on all those other marketplaces. And then everyone has to sign an NDA. So we get your email address, and then boom, you're on our email address for our listings from then on. That's over 10 years and over 1,000 transactions. That's how we've amassed so many buyers, and that's what they want.
And I think from how if somebody like a listing agent goes to a house and they have a presentation, I think the presentation here, then it speaks for itself. And I understand why you joined this group, because it's like, there's actually proof in the pudding. Right? Like, we've sold X amount. We have 160,000 people on our email list that are looking for businesses. So that's like pretty strong. So that's why when you found out about website closers, met the founders, you're like, yeah, this is a great model. And you have a lot of experience like with all this e-com, and it's not, because it takes a little bit of understanding how these online businesses work. Like my mindset, I've worked as a real estate broker. I financed thousands of properties and businesses. But this is a whole other space, right? To understand the dynamic of the online place. And it's really just, it's still in its emerging state, right? It's not even like, there's so much room where this is going to go. Just look at what AI is doing to the world right now. Chat GPT.
Yeah.
It's crazy. So
yeah, you're absolutely right. You highlighted like my unfair advantage against all the other brokers out there. I've sold $109 million worth of supplements and vitamins in my e-commerce career. I've done, $85 million worth of real estate transactions. I understand the transactional nature and how to create win-win relationships on the buy side and sell side from, a career of a decade of real estate transactions, and then a decade of transaction servicing customers and business to business transactions and working with vendors and creating wins for vendors. So something that's very unique for me that, none of my other colleagues at Website Closers or at any of the brokerages can match. But that's stuff that I love to do. I never planned any of that. It's just how I'm a driven entrepreneur, and I like to swing for the fences. And I have sold businesses and I have bankrupted them. And it's absolutely thrilling and completely shameful to go through all of those experiences. So I get it. And I can relate to my clients that are struggling and those of my clients that are, excelling. And I just had a testimonial from a client. I sold their business for $25 million. And they confessed to me that through the process, they felt like they were on the verge of bankruptcy multiple times. They had huge shifts in cash flow, moving back and forth and having to acquire inventory, and then having huge delays in inventory. They were backlogged in sales for 6.5 weeks, which represented millions of dollars worth of sales. And they were freaking out. And I can relate to that. I've been there. I've done that. I've lived on the edge. I've financed businesses with credit cards. I've borrowed money from friends and family. I've had the tough luck of telling people, this is not working out the way I expected. That's just the nature of this. And I think taking and bringing that to these transactions gives me the opportunity to share kind of what's going on in the background on the buy side, and making sure I can thoroughly explain what the buyer is getting into by looking at this transaction, because I've sat in those shoes. I've been the Captain Kirk, plotting, where I'm going and asking for help from Spock and Sulu and saying we're going this way and that way, and then showing up somewhere and getting smacked in the face.
That's awesome. Well, there's a lot more questions, but we're going up on our time here, so we'll have to have you back to do more. But everybody, you can connect with Nate by emailing him at nate@websiteclosers.com. And I believe if you email him, he can send you a link to his book.
Yep, I'd be happy to.
And that's called Maximum Exit. Whether you're a buyer or seller, I think Nate's obviously a resource that you should probably reach out to, and he's like a wealth of information. I really feel like I want to go buy a business or get my business sold, or one of the two, right?
Let's do both. Let's sell one first. Let's get you a big war chest and let's go hunt for some cool deals.
Yeah, no, it opens my mind. That's the thing. I think that's what I love about business, this type of business. Like the sky's the limit, right? Like it's hard to build a business to sell, but if you can do it, it must be an amazing, like your client the other day that's getting $2 million or whatever. that's a great feeling. You built something and you get that payday. I mean, then there's the clients that get 50 million, 20 million. I mean, it's just amazing, right?
It's incredibly validating.
Yeah.
That's what I find about this. Like, you put your blood, sweat, and tears in something, and then somebody else validates your business with a whopper of a wire. It's incredible. And it's so few entrepreneurs get the chance to experience that. And they're not that far away. They're not that far away from it.
Yeah, amazing. Well, thanks. Everybody go to email Nate at websiteclosers.com and, stay in front of Nate. And I'm sure he puts out newsletters and stuff. And you can go to his YouTube channel. He interviews people. They talk. I'm gonna start, now that I met you and like understand the mind of yours. I'm like, yeah, I got to tap into that YouTube channel, right? Because that's where you're going to learn a lot too. You find the people that you resonate with. I've been doing that a lot lately. Like, I've been doing a lot of, I have my blog websites where, eventually that I might sell that business if I get enough lead generation, but it's like, I'll go and I'll just study people. Like, you can like literally find people like Nate, like myself, and learn about, like, on my side, the financing, on that side, the business, the online business stuff, right? Like, you can go and just learn what you need and then just go implement, right? Or
absolutely,
you could have a W-2 job and you could, be doing quite well, but you could look at an e-com business and find one that fits your schedule. Keep your W-2 job, take over this e-com business that has some value add play, implement some strategies, grow that business, quit your W-2 down the road, because it's easier to get SBA financing if you already have solid W-2 income and you're not going to quit. They like to see that. That's a compensating factor.
Yep.
Right. And so this is a beautiful world, guys. Take advantage of SBA financing. I mean, it's like 80 to 90% LTC, loan to cost, right? And you can sometimes you can build in working capital and inventory. And so you're not just strapped when you move in. So when you purchase the property, I always say property, when you purchase the business, right? So you can't get better financing than that unless, for whatever reason, a seller is willing to finance. And sometimes they are, but you need a big chunk of change when they're doing a seller finance versus the SBA. You're going to get 80 to 90%. Okay, so
use that SBA. Absolutely, go get pre-approved. Reach out if you're a W-2 employee. I was a vice president of Bank of America when I started looking to buy a supplement business, and I was making $120,000 a year. I kept my job. I ended up launching a supplement business instead, and I co-ran them, and that was where I had invested in this campaign manager, and then started to jump in. But I was doing both for 8 months before I quit my job at Bank of America, and gave me that cash flow and consistency. I'd say probably could have done that for even longer. I should have stayed at Bank of America for another 6 or 12 months and continued to just run it. Absolutely. That is most of the time I see somebody that's like side hustling into this. They're doing that. Keep your day job or keep whatever it is as your primary income source. Do this as a side hustle. Find something that's not going to take a ton of your time. Put down a chunk of cash. I would way rather acquire a business now. I would not start one over again. It's painful trying to get through that first $1 million or $2 million worth of sales. Let someone else do that. Take their frustrations and wins and jump into it.
I'm actually listening to the Audible book by Walker, and he just buy then build. Because he talked about. I just listened to the first couple chapters so far, but he basically talked about how he started a business and it failed, and he then he bought a business and he took the same stuff he was doing that he failed and bolted it onto the business that he bought, and ever since that he was successful. So. That was a cool story, and I get it, right? Like, you can do things the hard way or the easy way, and I want to start doing stuff the easy way. I can tell you that. And so,
me too.
I mean, in the online space, though. Okay, so like I was doing some research for a presentation, and there's like something like 13 million boomers that own businesses. I don't know how many boomers own online stores, but there's got to be some that are ready to retire that are willing to not give you a fair deal to give you the, what I mean? Like, I think that's the kind of deal I want to find, is like somebody, I know obviously if you're selling, you always want to get top dollar, but like to find somebody find a seller that's like, hey, I got to leave a little meat on the bone for you because we got to walk into this deal. The beautiful thing is, though, if you're getting SBA financing, the deal's got a cash flow. So you're in decent shape. So I'm looking for a cash flowing deal from day one with a lot of upside, right? Because I feel like I can bring my genius to that business and grow it. That's what I'm looking for, because I'm a good marketer. I understand that. So I already have the skills, I think. Then it's just plugging in and buying the right business, and then getting SBA financing and done deal. There we go.
We need a win-win for this to happen. The SBA won't let you overpay for it. It, as you said, it has to cash flow. So let's just look for some SBA deals or deals that are like that, and we can come up with some ways to get creative about the financing. We still need to come up with a large chunk of cash at closing, just from the nature of these businesses. They're profitable, they're growing. The seller wants a chunk of cash. They don't want to sell this thing all seller financing. That doesn't happen on our marketplace. You can find those privately, but you gotta be willing to hunt for that.
Yeah. Well, very good. Remember, guys, go to email Nate if you want to talk to him and want to buy a business or sell a business. Nate at websiteclosers.com. And thanks so much, Nate, for your time. Really appreciate it. It was a really great episode. I always get energized when we have good conversations.
I love what I do. I love talking to people that love it too. So thank you for your time.
All right. And thanks, everybody. Please like and subscribe to this YouTube channel so I can bring on other great guests so you guys can get awesome content and excite you, and then you go out and do it. Just implement what you learn. We'll see you on the next episode. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.